Hello and welcome to Profiles in Risk. This is your host, Tony Cañas. And today I have with me Daniel Demetri, CEO and founder at Trellis. Daniel, thank you for joining me today. How's it going?
Thanks for having me. It's great to be here.
Awesome. And you are in the Boston area, right? According to your LinkedIn?
Greater Boston area. I'm actually based in Salem, New Hampshire at the moment.
Okay.
But I'm originally from the Boston area, and happy to be back here after starting the company in San Francisco, actually.
Gotcha. And we're recording on May 2nd. So I'm guessing the weather is beautiful in New England by now.
Today's cloudy, but yesterday we were at the beach. It was great.
Fantastic. So Daniel, we always give the chance to the guests to kind of give the elevator pitch. What is Trellis?
Trellis is a lot of things, but ultimately it's a data platform that helps carriers, P&C carriers, particularly personal lines, so auto and home, better reach customers. So we are helping facilitate, we build technologies that make it easier for consumers to find and to get the right insurance for them. And we do that through both direct distribution channels, like on your carrier's website.com, but we also have technologies and actually operations and solutions that help carriers embed their solutions into third-party platforms and environments, like a fintech app or a financial institutions program.
Okay, so P&C personal lines carriers. I come from P&C space, so very likely a lot of the listenership is P&C. Okay, so first and foremost, a data platform, okay, for P&C carriers. So how does it help the carriers better reach the personalized customer?
Totally. So we've taken a total ground up look at what is it that the distribution and insurance distribution experience should look like. And I often analogize it to self-driving cars, not because necessarily the insurance of self-driving cars, but just the way in which self-driving car makers are bringing that technology to market. And so if you look at a self-driving car, we've divided it into three separate pieces of a value chain. And the reason we look at that is because we think that insurance and financial management for consumers, that they often want to remove themselves from a tedious chore. And they often thinking about their insurance and their finances as a tedious chore, but it's an important one. In the same way that driving safely is important, managing your finances and managing your insurance is important. And so we think automation sits as the solution to taking a tedious chore, relieving humans of it, but allowing it to be done with high quality to respect the importance that it deserves. So if you look at self-driving cars as doing the same thing for us, which is taking care of us to help do something that we all have and all need to do it safely and well in respect with our values and our needs, that's the model that we're looking at. And so if you look at a self-driving car, it starts with getting data, because you can't drive a car if you don't know what's around it. And the same is true of insurance. You can't drive a consumer's insurance or really offer good advice to someone if you don't understand them. And so the first thing that we've started with is building our own LiDAR for your car insurance. It's a 360-degree view around the consumer and their insurance profile. And so we have a technology that allows consumers to digitally share their insurance information very seamlessly and easily. And so it's the same behavior that consumers have had for 100 years. They go to an agent's office, they bring in a copy of their policy or their mortgage mortgage details or whatever it is, and say, I need this property insured, or here's the coverage I already have. What do you think about it? What can you do for me? And we've digitized that. We've made it a lot more efficient. So that product is called our Trellis Connect product. We'll talk a little bit more about that, but it's essentially allowing consumers to digitally share and upload their insurance information so that carriers and their websites and their automation can act in a structured approach in response to it. The second thing is then recommendations. So, that's, if you're thinking self-driving cars, this is the thing that says, hey, that's a pothole, we should steer around it. Or that's the red light, we should stop. Or you want to get to work, here's the route, here's the highways that you should take to avoid traffic. And so for us, we've built a platform called Savvy. And Savvy is a insurance recommendation platform. It's a nationally licensed insurance agency, but it's also a suite of technologies that could be used by a carrier's direct team. And so it's a choice platform fundamentally, and it can allow a customer to get recommendations for what they should do. So given all the information we've retrieved from them with Trellis Connect, Savvy then provides guidance into here's how your life could be better. And so it recommends insurance to the consumer. And then the third thing in a self-driving car is it actually does the work. It actually integrates with the incumbent solution to actually start, stop, and steer the vehicle. The recommendation isn't where a self-driving car leaves off. It doesn't say you should take Highway 101. It actually takes you on Highway 101. And that's what's so cool about it. And so we're doing the same thing for insurance. And we're saying, well, once you've said, I want to switch to name your carrier, we want to integrate with the bind APIs or the other sort of deep integrations that are available for carriers today and that are upcoming to enable the consumer to super seamlessly, without even leaving the context in which they are finding this insurance offer, switch to that insurance offer. And maybe even cancel their old policy. And so that integration with the incumbent solutions is the third thing that Trellis does really well, bringing an end-to-end digital or even omnichannel platform to a broad range of integrated environments. So that's how we look at it, starting with data, bringing in recommendations, and then providing fulfillment on the back end. And we do all of that through a combination of technology as well as in-house, sales center. We have a contact center.
Okay, so savvy.insure, right?
Yes.
Okay. So I looked it up while you were talking about it. So savvy.insure. So it's not a multi-rater per se. Like what I mean by that is it doesn't ask me for my information to get a quick quote from multiple carriers. Rather, it asks me to log into my existing carrier. So
yes,
that's a very interesting approach.
Yes, yeah, we're not the only ones who have taken that approach, but it's an approach that we're very bullish on because a lot of our distribution, Savvy.insure is not a website that we're going direct to consumer with. It's really more of a prototype or proof of concept. It's an illustrative website that is used to explain the technologies. But our primary way of finding new customers for insurers is to go deeply embedded into fintech apps and financial banking apps to help acquire customers out of those environments and contexts. And in those environments and contexts, you're often finding customers who already have insurance. I think broadly in the market, some like 80% of shoppers for home and auto insurance already are insured.
Yeah, but
at the very least,
they're mandatory, right? Like
mandatory. Yeah. You're very often, and if you look at just most people already have a car, most drivers already have a car. You're looking year on year. So, and if you look at retention rates, it's just mathematically, people already have insurance.
Yeah.
And those are also some of the most desired customers by insurers. Most insurers prefer acquiring a proof of prior or a POP customer versus a no prior insured. So that's why we've really started with that approach, because we're meeting the customer kind of where they are in their journey. They already have insurance. And there's a lot of folks out there who've tried to build, you could call it like a kayak for insurance. And we think that that's, not necessarily the model that fits the customers, a lot of end customers' needs, because what actually, like, a kayak solves an unmet need, which is I need to get to New York or I need to get to London and I don't have the need met. Find me the best deal and I'll get there, and I'll meet my need. But with insurance, with 80% of people already having insurance, their need isn't go get me insurance or even go get me the best insurance. Their need is, can you do better for me than what I currently have? Because they bring that status quo, that inertia of I already have this and I trust my agent. So you're really going to have to, any real insurance sales professional at any agency is going to tell you like all the ways in which they need to drive a wedge or drive a fork or convince the customer that they need to make a change. But convincing someone they need to make a change is kind of the hard part for a lot of insurers, even when they have a compelling product, even when they can do better. And so that's why we're starting with that proof of prior and the customer journey that they need to be on. And we realize like they don't want to just search the whole market and start from scratch. They really want to start from what they already have. And that's always been true. That's why, again, for 100 years, customers don't show up typically to an insurance agency and say, I have no idea what I'm doing here. They're typically showing up and saying, here's my current situation. At the very least, I have these cars and here's my current policy on my cars. I'm buying a home. Now, what should I do? But they're often showing up with existing insurance information and bringing that into the conversation. That's what's been missing I think, for a lot of standard carriers or preferred carriers, especially their digital experiences. I think that's what's been leading a lot of standard and preferred carriers' digital acquisition portals to have low quote to sale or low, even rate call to sale kind of conversion rates. It's because the customer comes in, they don't have that conviction to switch because you haven't met them where their head is at, which is, here's what I've already got. Are you doing better for me or not? And they don't know. And that's why I think, by the way, something like 75% of Americans shop for car insurance online, but only like 20% actually buy it online. And so there's this like supply and demand gap that I think is only answered. Answer that question of like, why is it that Americans are trying to buy insurance online, but then end up doing it on the phone? And I think it's because they just can't get the conviction to buy or conviction to switch digitally. And that's because we're not meeting them and their needs. We're not filling the job to be done online. The job to be done is to convince them that we're going to give them better insurance and give them more value, and to do it online. And we're just kind of saying, here's a quote. I like this quote. You have to decide on your own if you like this quote. And that sort of that gap that exists between what customers need in order to get the conviction to switch and what we're delivering online is the one that we look to close by saying, if you could just digitally upload your insurance information, we at least be able to present you that information and reflect quotes that are contextualized next to it.
Okay, so from the consumer perspective, I totally get why I don't want to do it this way. I've said before on the podcast that I'm insured with Liberty, and I'm basically I'm paying the same for my auto today, when neither myself nor my girlfriend commute. We're both remote, as we did 5 years ago when I commuted 22 miles each way, right? And we know we're overpaying, but it's such a pain to,
right. There's 9 lines of coverage, and most people are not insurance nerds like you. So if you ask most people in the country, what's your bodily injury liability limit? I mean, you may have asked them like, multivariate statistics questions. And the truth is, like, that question is genuinely a hard question. Like, it really does require probably a decade of actuarial science and tort law to truly answer a question effectively. Like, what should be your bodily injury liability limit? You have to understand, well, how likely am I to be in an accident? What kind of medical bills are people paying? Like, and what's the likelihood of my type of car in my kind of neighborhood? And you have to personalize it. And so that's a really hard question. And so today we're just kind of asking people to just do it from scratch online on their own. And that's just basically an insurmountable task. And so it shouldn't be that surprising that we're at least asking people to get on the phone and talk to someone in the white lab coat with, the licensed expertise. But I think that what we could do online is we could say, well, look, here's your current bodily injury liability limit as a point of reference. And so maybe we could match all your coverages and get you a better rate. Or maybe, we see customers come in all the time with $250K of bodily injury liability and $5K of property damage liability. And we're like, who wrote this policy for you? And, when we talk to these customers, we say, what did you want? Did you want a lot of coverage and this is something that keeps you up at night? Or did you want to save money and you're more concerned about your bills and your budget? And they say, I really want something in the middle. And then we have to explain, well, you have everything but the middle. You have like the extremes on both sides. And so like, we have to help them, bring that coverage in. But that's something that we can do for them more automatically. We can help them on that journey and figure that out automatically and digitally and hyperscale and efficiency. And that's not something that I don't think anyone's really tried to do before.
Okay, so what you're describing is actually help me shop for the right coverage, not for the best price.
We do we help you find the most value. Yes, okay. But it's not, but you're right that what we definitely do not do is just take some coverages that either you currently have or you specified and then go shop the entire market and then just find you the best price. We definitely are not very price focused. We're going to be looking at value in combination with price. So, and depending on the distribution partner, they may have their own needs as well. So, one of our distribution partners that's coming up is a credit card company, and they want to make sure that the insurers that is in their marketplace support the credit card that they offer, right? So that would be like a requirement in their marketplace. We even operate this choice platform, for a carrier. Like, there's some large carriers have an amalgamation of different brands that they need to help their prospective customers to shop between. And so, as you know, it's not just rate, it's also going to be brand. It's going to be how likely is it to be a long-term relationship? Like, has that carrier updated rates recently? Or are their rates maybe stale? And so there's going to be an uprating in 6 months, and that's going to be a less quality relationship. The good news about insurance distribution is that the motivations, the incentive structure is highly aligned between the insurer and its agents, for example, because, you know, if that relationship isn't a long-term relationship, that agent's going to lose that business. And so agents really are in the right place to be driving long-term relationships. Yeah.
Okay. So it makes sense from the consumer perspective. Yes.
Sure.
If I want to quote,
we're going to find you the most value.
Yeah.
As a consumer, like, this is, whenever my friends or family are like, oh, you're in the insurance business, like, what should I do to go, like, find out if I can do better insurance or if I have good insurance? And I always say, like, this is absolutely, savvy is the best way to check out if you can get more value from your insurance. It's definitely not perfect. There's always room for, we're constantly improving it. But as far as, like, if you're going online and you're, as a consumer, trying to find the most value from your insurance, it's definitely a platform we're really proud of offering.
Okay. So I log in my case, Liberty Mutual. Does it matter, or how much does it matter which carrier I'm currently with when it comes to your ability to the system's ability to get?
We support policyholders of about the top 20, 25 carriers in the country. It gets us about 90% coverage of the customers that we typically are finding visiting digital experiences. There's a nice correlation between whether you're visiting a digital insurance experience and insured with a top carrier. There's higher concentration of the P&C market among the digitally focused audiences. The offline audiences is where there's more fragmentation, which intuitively makes some sense. So yes, if you're one of the top 25 policyholder of one of the top 25 or so national carriers, then we should be supporting you typically. If you aren't, then we don't. And so then you have to fill out the forms like any other website.
Okay, 90% is pretty amazing.
Yeah, we're happy with it. Yeah.
So that makes sense to me. So if I'm a major carrier, or even a regional or super regional, why do I want to play along? Because why do I want to make it easier for my customer to quote to potentially leave me?
Well, ultimately, the carriers are going to either, like, lose the customers they don't want, right? If, like, why is it that carrier has, is losing a customer, right? Why is that customer shopping in the first place if they're contented? So I think that really we, like, what gets the carriers excited is more on the other side, which is the acquisition. Like, carriers are going to lose the customer. Like, they're always going to churn the customers they're going to churn. I don't think that we, make that significantly worse. I think that what we can do is actually build longer term relationships between customers or, policyholders and their insurers by ensuring that maximum value is created out of that transaction. Today, people don't understand their insurance, and so they don't value their insurance because they don't understand it. So that to them, they just feel like, they have to have it, so they go get the minimum of it. They don't trust that they have good insurance, and they can't value it appropriately. So if we can bring in a little bit more of an independent lens and say, this insurance you have maybe doesn't make sense for you. And, if you compare yourself to others and similarly situated, for example, and, other people will typically have this other kind of coverage, then people might feel more confident and might better understand, or might even value more the insurance that they're buying. And then that could lead them to stick around longer. And also could, could enlarge in the pie of insurance, where the customers they're acquiring from us are more valuable, are going to retain longer, are going to buy more insurance than the customers they're losing, they're losing them because they either didn't want them, like the customer's profile evolved away from them, or because they didn't do the prior distribution didn't do a great job at fitting the needs of that customer to the product that they ended up purchasing. That's ultimately why insurers lose customers, is either because the insurer doesn't really want that customer anymore. Maybe they're too heavy on Texas business and they just don't want Texans anymore and they uprate the Texans. Or maybe they just didn't like their distribution, their legacy distribution channel didn't find a good product fit for the insured and what they need or what they've evolved to need. So I think that ultimately we're creating value in the ecosystem, and that value will manifest in the form of having longer term relationships between insureds and their carriers, and more insurance, more dollars of premium per purchasing customer. That's our objective, at least.
Okay.
So we want our customers to better understand and feel more value coming out of their insurance relationships.
Okay, it makes sense. So
Yeah.
so what's the integration like? So if I'm a carrier and
Yeah.
I'm interested, what does that integration with my systems look like? Let's say.
So that's actually a point of pride for us, is that we work with carriers. We're I call us the elbow in the ecosystem. We're extremely flexible in how we work both with partners, distribution partners, as well as how we work with carriers, and we can flex both the economic structures as well as the technical integration. So, one way in which the simplest way to work with us is as an advertiser. If we can figure out which demographics or profiles you're looking for to acquire, then we could incorporate a listing into our platform. And we could, even on a CPA basis, like a cost per sale or cost per quote, or a cost per click, we can send leads to that carrier that are hyper targeted to the profile that they're looking for. They could say, I only want customers with vehicles newer than 2018 that have full coverage and $500 deductibles, and where their current premium per month is like over $250 a month. Like, they could get very granular about the box that they want, and they can dynamically price those leads as well. So that'd be the simplest way to work with us. So one step more complicated than that would be giving us an integration to allow us to quote the product in our platform. And so if they could provide a rate call one or some other sort of quote API, then we can start to show rate in our platform, and we can match those rates against current coverage or match those rates against a recommended coverage based on current coverage. And then one step beyond that would be taking the user through a guided interview, a full application, and even presenting a final rate and maybe even binding. So we have recently announced a partnership with Branch Insurance, where customers can come to us, they can get a coverage match or a coverage proposal, and then they can actually bind Branch Insurance in our platform without leaving our platform. And that's a really exciting thing, because when you look at the Branch quote, it's hyper contextualized next to your current coverage. So you can see, oh, my BI limit was matched and my deductible was improved and my uninsured and underinsured. And you don't even have to really necessarily know what all these little line items mean, or what the differences between them. As long as you feel good about your current insurance and then you can see that it got matched, then you might have enough conviction to switch without getting back into the details that you originally went through when you first bought your policy about what each of these things actually means. And so that's a really exciting integration. And we've got other carriers that we're currently in the middle of working with to bind their policies in our platform. And then that platform gets embedded into our distribution partners platforms, which would allow you to switch insurance or sign up for new insurance without even leaving the fintech app or the financial institutions app that we're embedded with. So it's it could be a very deep integration, very native.
Yeah. Any great success stories from
and the other flip side, by the way, is like,
Mm-hmm.
you can take this choice platform, or even the lack of a choice platform, and just the digital acquisition experience for the product. You could bring it into, as if you're a carrier, you could bring it into your own digital distribution channel. So that's something else that we've tried out and are working on doing, is saying, hey, look, that only 30% of the leads that you're buying or that you're organically generating on your carriersite.com are qualified for your product. You're going to get a competitive rate from your product.
Mm-hmm.
And so you're heuristically today, you're guessing at which customers you're going to be a good fit for, and you're probably using a click exchange to monetize the leads that you think you're unlikely to have a competitive rate for. Basic example, if you're with Liberty, when I was in California, if you quote Liberty Mutual in California, they show you a big click listing wall before you get their quote is small and all these carrier ads are big. It's a very imbalanced thing, which is fine because Liberty doesn't really want California customers. I mean, they're not growing that book as quickly as elsewhere in the country. And so in balance, I think they're less excited about California customers versus other kinds of customers. So that's an example, though, of like, they're kind of guessing, because I'm sure there are some California customers that they really do want, where they think that person's a great fit for our program, or where I'm really imbalanced. I want more homeowners in that zip code. And so with our technology, they could get really precision targeted about, if they gave us a quote, we could say, well, that quote is $30 a month within range of their current premium and for the same coverage. So you actually do have a good shot at winning this customer over on brand and service and the other value that you can create for the customer. So you don't have to guess. Like, we could just know lead by lead whether what your product has is competitive. And then for the other leads, we have a fully, quote, like a rated choice platform. So you can deliver a lot more value than just a wall of ads, a wall of listings. You can mix in actual rated listing, like quotes from other carriers. That's going to create a lot more value and better reflect what the customer expects, the prospect expects from a downfall experience where they filled out basically your whole insurance application. They don't expect a logo that they click on and start over. What they want is a quote that they can basically wrap up and finish with. And you can deliver that on the back of integrating our platform by bringing customers into it or using our APIs to deliver other insurance offers and recommendations in your site. So anyway, that's the other way that a carrier could integrate with us, is pulling quotes and recommendations out of it, including using it to manage the entire customer journey and putting their product into the platform. And then we dynamically would navigate the customer between carrier's own in-house products and potentially external products.
Okay. What's the revenue model? What's the pricing?
It's another point of dramatic flexibility on our part. So we're a hyper hybridized business. So we've got a technology that we can license on a transactional basis. So if you're just using the data platform or module, we could charge you per data profile. If you are using the insurance recommendation platform, there's a different structure for that. We're typically, though, paying our customers. We're typically paying distribution partners, and then we take a revenue share. Carriers pay us either on a cost per click, cost per call, cost per quote, cost per sale, or on a full new and renewal kind of commission basis. So we act as either an agent or as a producer, agent of record. We can even service the book in-house, or as an affiliate, as a lead generator, as someone who sends profiles and clicks and customer intent over to the carrier into their direct channel. So we really are quite flexible in structure. But again, it's everything from transactional SaaS fees through to cost per click, cost per call, all the way up to cost per sale, and then over to new and renewal commissions. It's the full gamut.
Okay, so whichever way you want to engage, we
100%.
can find a way to price it that makes sense to you.
Because we started from the customer's perspective, the consumer's perspective, and the consumer doesn't care that if their agent or if this service that they're using is getting paid as a commission or as a cost per lead. They don't care. They just want the right insurance for them. And what we learned is that insurers care a lot. Like, certain insurers will never appoint an independent agent. They never will. It's just anathema. And other carriers will only do that. They have said, we will only appoint independent agents, and you have to service the book. And so you literally have such a wide spectrum of how insurers want to work with distribution partners, and the consumers really couldn't care less. And so that's why we ended up being very flexible about how we work with carriers, because we ultimately wanted to give the best insurance recommendation to the consumer, and they're pretty flexible about how we get paid.
Okay. Finally, I'm curious, how did you get the idea for this? Like, looking at your LinkedIn, you've definitely had significant tech experience prior, but it doesn't look like you were playing in the insurance space before. So were you frustrated with your own coding experience, or how did you?
So the story with that is, I have a background in finance technology, and then finance technology. So, I was at finance, I was at multiple banks like JP Morgan and Citi. And then in technology, I worked at Google. I spent a summer at Kayak. And then, after Google, I went to finance technology. I led product management for an online lender called Earnest, and which got acquired by Navient. I co-founded an insurance company. It's called Doma, and it was called States Title. So it's a title insurance company. We got very familiar with the mortgage and the lender environment. And that was the main go-to-market strategy for that title insurer. And then after that, I started consulting in the insurance space. And I noticed that, and I got really excited about working on a bigger market than title insurance. I mean, I love title insurance,
It's so
but
niche.
it's a little niche compared to like, I think title insurance is like $30 billion a year, including like the escrow fees. It's like $15-20 billion a year of premium. Whereas, auto alone is $250 billion with like 20% that's spent on sales and marketing distribution. So like there's more money spent on sales, marketing, and distribution alone of auto than is spent on all premium of title. So it just felt like a huge opportunity.
Mm-hmm.
And so, I was consulting in the space and I noticed that quote to sale was lower than I would have expected after so much investment and friction in the funnel. Especially bringing that lens of in a lending environment where we were doing student loan refinancing, which is very similar, because what you're talking about is talking to a consumer about a very important, critical financial piece of their puzzle and convincing them to make their life better by customizing, in the case of a student loan, customizing their payment plan and balancing the interest rate against term and provider. And so like, who do you want servicing your loan, and how long do you want that loan to be around? And again, what do you want your monthly payments and your interest rates to be? It's actually a pretty complex thing. And it's a $70,000, decision when you're talking about your student loan. So taking that mindset of how did we get people to make their lives better in alignment with their values around what they want out of their lives. Do they want more financial security day to day, or do they just want to pay off that loan right away? Like, how do they feel? What keeps them up at night? And bringing that thought to that big decision that a lot of households face, which is how should I manage my insurance, which is a huge expense, probably for many households bigger, and for many, many households more relevant because they may not have a student loan, but most people have car insurance. And so I was the quote to sale. I learned what quote to sale rates. I talked to big carriers, including all the way up into Canada. I talked to Intact, and I just learned about, okay, if life as a big carrier, I have this problem, which is I'm buying really expensive online leads. I'm putting a lot of friction on the consumer to get them to a quote, and then 96% of them just drop off, or at least 94% of them will drop off, which for the customers is like, agonizing, because you spend 15 minutes not saving 15%. They never said 15%, like 15 minutes will save you 15%. It could. 15 minutes could save you 15%, which remains true. But I think that many people like have this perception of car insurance, which is frustrating, because they're just like, I tried it and it didn't work. And like, that's annoying for 96% of people. And it's a really important category that a lot of people, if they were to bring it again or try it again or do it the better way, then maybe they could get more value out of that system. So anyway, we think it's 2022. It should be 15 seconds could save you 15%. That's what we're kind of working toward. And for everyone else, it's 15 minutes, but we're going to at least help you along the way, maximize the use of that time.
Okay, that makes perfect sense. And I'm just curious, while building this, did you go through any of the accelerators?
No, our first checks in were, after like family and friends, was General Catalyst led a Series Seed. So we went straight to the big leagues, basically. Okay. Yeah.
Excellent. Okay, awesome. It's been very, very interesting. I love how passionate you are about it. You definitely.
I've been a little over 3 years now, and we're at the beginning of a total revolution, not just in insurance, but in all financial services. And that's what's so exciting is, building this product for people like my sister, who's a doctor, wants to live a financially healthy life, but just doesn't know really like even the first step to doing that. And so bringing simplicity and being able to confidently say, look, just go use this thing. It won't take long at all. And it could help you save a lot of money, or it could help you get better coverage and find mistakes that you might have made. People, today, so many friends and family just stick with the same declarations and the same coverages that they had 5 years ago. And it's not accurate anymore. And their agents just, earning the renewal business, sending out the Christmas card, but they're not really creating value. And so we're just really excited about that opportunity for us to basically raise the bar, and particularly raise the bar for digital direct experiences, but also just for the digital experiences that customers expect.
I love that example that you mentioned. She's a doctor because that's a perfect example of how complex this
Right.
industry is, right? It doesn't matter
Right.
how educated you are,
Right.
unless you happen to work in insurance. You
Yeah. Unless you
basically
happen to run
have
an insurance
no
podcast,
idea.
then you're like, yeah.
Exactly. You basically have
Yeah.
no idea what you're doing with your quote, which
It's
is
so
why we've
true.
had agents.
Totally. It's more
But
complicated than your student loan. I mean, it's just so complicated. Yeah.
yeah,
And changing too. It's dynamic. People think, oh, I got my insurance, so I'm done. No, no, no.
and
You got your insurance, so that's the beginning.
yeah, and the first
Yeah.
set of insurtechs that played in the distribution space uh, basically did little more than help you find the best price. And the
Yes.
problem is the
There's
best
been too much
price
focus on price. Yeah.
exactly might mean that you're not getting the right coverage. So whatever we
Right.
can do to get you the right coverage at the right price
Yes, exactly.
makes absolutely perfect sense to me.
Yes.
So thank you very much for your time. Looking
My
forward
pleasure.
to see you guys grow. Happy
Thank you.
to have you back in a year or two as things continue to grow. Again, thank you very much for your time.